The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 14 April 2023. Well, I'll start with gold as I usually do. This is from Mainstream Financial Press, CNBC. It's about a 3-minute interview with a woman from PAMF. And the bottom line is gold is a scorecard on how well the Fed can land the economy. I think most of us, at least that follow me, know that that's impossible at this point. And she's forecasting $2,500 gold. I think it's going well beyond that. But she is stating that it will increase in paper price. Next up is from Kitco News, and China continues its gold buying spree. And this is from a tweet. Christian Gopal, data from the People's Bank of China shows an 18-ton increase in its official gold reserves. March, now 5 consecutive months of buying totaling 120 tons. Total gold reserves amount to 2,068 tons. And that's the official number. That is not the exact number. It's probably closer to 4 times that amount. The U.S. claims to have about 8,000 tons. Regardless, they keep purchasing gold. And last up, to revivify what I just said, this is from my friend Frank Holmes, U.S. global investor. Central banks are buying gold at a record pace so far in 2023. So it's not just China. You can scroll down. I encourage you to read this article this weekend. Central bank demand has the strongest start to a year since at least 2010. BRICS countries continue to be huge buyers. Net inflows into gold-backed ETFs turns positive. And weak manufacturing data points to potential trouble ahead. Do you have your 10%, meaning your 10% allocation of the precious metals? Now, moving on to silver, this is from Finance Feed. Silver's price hits a 9-year high, and inflation is only partly to blame. Silver reserves and production have not kept up with the increased demand for green energy. In just 20 years, reserves could be completely depleted, leading to skyrocketing silver prices. I want to pause there and say that there was a deficit between 1990 and 2006. It's a 15-year deficit. At the start of the deficit, there was 2 billion ounces of silver above ground in commercial bar form, and that was taken down to 500 million ounces. So in that 15-year time frame, we ate up from above ground supplies 100 million ounces on an annual basis for 15 consecutive years. In 2006, that turned around. We started increasing, and this is because mining activity increased significantly, primarily due to China's build out, and the silver production increased. We started rebuilding above ground inventories. This, I think, is a bit conservative in just 20 years. If you look at Matt Watson's work, it's a lot closer than that. But I think the point is well made that silver is becoming more and more scarce due to both monetary and industrial demand. This article is fairly bullish. You can read the whole thing, as I said. And this last paragraph is kind of interesting. I'm going to read the whole thing. It talks about, depreciating currencies, banking problems, and investors believe we're in a new bull market in silver. This will reduce as the strength of the dollar decreases. It will support silver's price, possibly boosting the price to $30 in 2023. And that's what I expect, at least. And that's a pretty big number for a conservative outfit like this to publish.
There is nothing more critical to your financial future than a sound money system. This is the premise of the Morgan Report. To understand where you are going, you need to know where we've been and why our current monetary system is crumbling like a house of cards. More importantly, you need to know how to build and preserve your wealth even in these uncertain market conditions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history. Will you be in when it happens or sitting on the sidelines wondering what just happened? Join our free email list at themorganreport.com. Become informed, awake, and aware.
This is from Financial Express, basically stating the same thing, that the silver prices to remain elevated and analysts see volatility. Lots is going on in the India market. A lot was imported last year, 300 million ounces, and the wedding season is ripe, and that means more demand for precious metals in that part of the world. In less than a month, silver has risen 20% on the multi-commodity exchange of India. March 9th, silver prices closed at rupee 61, call it 600 per kilogram. And within weeks, on April 6th, prices rose to 74,098 per kilogram. The fastest rise in price has hit demand, and imports have fallen as well. India is notorious for buying silver when it's the right time to buy, meaning at low prices. And they usually don't buy at higher prices. And that's why they bought so much in the doldrums when silver was trading somewhere between 18 and 20. And now they have backed off somewhat, although the demand for jewelry, as I just said, is kind of a separate category of silver for wedding purposes. And this is just an article verifying what I just said. Demand for silver jewelry soars ahead of the wedding season. Wouldn't bother reading this article. I think the headline's all you need to know. I'll say a bit about the platinum group metals. I've been covering that the last few weeks or so. Visual Capitalist, always a shout out. They do such great work, and it's easy to comprehend what they're doing with pictures. What does the automotive industry need? Platinum group metals, ? So it talks about the different PGMs. Everyone's pretty familiar with platinum, palladium, rhodium, ruthenium, osmium, and iridium. And we go through the group metals uses in 2020. You can see the lion's share is for catalytic converters. Jewelry's 9%, so it's a swing factor. Using in chemical processes is really bigger than jewelry slightly. So the electrical vehicle forecast is here. I'm not going to read this whole thing. It's interesting. You could probably bookmark Visual Capitalist. They put out really good material. You can see the percentage breakdown in mine production. And as I've said, this is a little different. So the platinum, I don't think they break it out, but 70% roughly of platinum comes from South Africa. But this is all those metals combined, which is your palladium, platinum, rhodium, iridium, as I said, and that those combined is 54%. It's more than half of the world's production comes out of South Africa, which is having massive problems. If you add their neighbor, Zimbabwe, to it, you're up to 61%. And by far the biggest news this week was the Unicoin. What is the deal with the new Unicoin International Central Bank Digital Currency? Highly recommend you look that up. I'd put an IMF Unicoin and hit the news bar on a browser or a search engine, and you can have at it. Central bank digital currencies have been a hot topic this year, blah, 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 blah. So the news that a digital currency monetary authority has announced the launch of a new digital currency is surprising. The currency, called the Universal Monetary Unit, UMU, or Unicoin, was announced during the International Monetary Fund spring meeting in Washington, D.C. UMU is distinct from another project called Unicoin. The two are not related. Be in crypto will use UMU going forward. So you can read this article. It's rather frightening. There's also Project Icebreaker that the IMF has completed, and I will be reporting on that with Stansberry Research next week, early in the week. And I don't know when it'll be posted, but you might want to take a look for that. This is David Morgan of themorganreport.com signing off.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.